weekend all. Ira Epstein of Linn & Associates with your weekend edition of your SPDR ETF review. And this is for Friday, the 17th of September, 2021. Well, now the interesting thing that we do on the weekends is we look at weekly charts. So that's going to be the event that we look at today. Remember that we have the FOMC meeting, the Federal Reserve meeting, this coming Tuesday and Wednesday. Canadian elections take place on Monday. So it's going to be a very eventful week with a lot of things taking place there. ARK, one of the few stocks up today. Amazon got hit. Apple got hit again. I'll show you that one in a moment. Here it is. I knew Apple was there somewhere. And UFO up. Flying object? No, you know what that is. XLV up a little bit too. So when we look at the tech sector, I always like to start off with that. And the reason that it's under pressure a bit, interest rates are going up. The tech sector doesn't like higher interest rates. And we're back up to that 136, 138 level in the 10-year notes. And as that's been climbing, you can see how this market's been slipping back. The pattern with the swing line is still bullish in that you have higher lows and higher highs, the definition of an uptrend, and that stays in place until you get under 151.21 on this chart pattern, and that's about $4 away. The support right now, 149.90 on the 18-week average, but I want to show you something. Go back another week, 148.87, 147.84. So you're not moving about it. You're not even moving $1 at a time. So you're still, when you open, probably going to be under this number of 151.21. The point is, even if you break down to it, while it could be support, you'll break the bull pattern. That's all I'm saying. In terms of the Bollinger Bands, you're staying within them. This is where it was hit, and this was an important number once it got hit. And what's happening now is you're starting to lose the bullish momentum. This is called an embedded reading. It's when the red and the blue go sideways over 80. And until the red closes back under 80, the momentum is said to be locked in bullishness. Now, because the market finished off with an 83.43 and the week ended on a low note, if you're down at all come early Monday morning, be careful. This number might slip under the 80 level on this weekly chart. I'll be looking at that myself to see what it does. When we look at PAVE, it's had nothing but problems because President Biden's plan is in problems. We don't see a clear path at this point to get his reconstruction plan through. You've got Joe Manchin, another senator that are Democrats, saying no, they won't accept the plan the way that it is. The Republicans forget. They're going to stay unified against it in the Senate. I haven't heard who's wishy-washy in the House completely, but you only have a 3-vote margin there. We've seen the first salvo of taxes that want to be raised. You know that the Republicans are going to be against that. So the question is, what can they do with their first salvo on that? The question then, how do you trim down the $3.5 trillion to get to a planned number that might work if the taxes are also handled? At the end of the day, it's horse trading. Will something get done? Your guess is as good as anyone else's. In XLI, lower highs, lower lows. Now you're down to the number where the pros start covering. What do I mean by that? If you do a study and you look at the black dashed lines, you will see that more times than not, when you hit them, the market gives you a turn. Now, it's not a direction turn of trend, but it's a bounce away from that number. And that's where I think you're headed, to an area where the pros take some money off the table. I know you're going to tell me the trend is down, and it is, and the momentum is down, as it is. I'm just saying the market's primed for some profit taking, no more than that. When we look at the energy sector, on the XLE, you have stayed underneath this 18-week average of closes the whole time. So even though we've had this beautiful rally, you're not getting the participation out of this spider. Nowhere near it. Not the right one to participate. SPY has participated to the upside, but all kinds of problems. You lost your embedded reading. What do I mean by that? Here's what I'm showing you. Notice how these markets stayed over this whole time since April. The slow stochastic, the red and the blue, have stayed over the 80 level. Watch this week. You're under it. Unless you get a monster week to the upside this coming week, the odds favor that this market's going to try to fall back to the 18-week average of closes. You need a monster week. You can only re-embed once you lose it the week after it's lost. After that, you got to go through the whole process of several weeks over both numbers to do it again. So this market, pressure on it. EFA, this is that example that I'm showing you. You get up to the upper Bollinger Band, that's where the pros take money. Why? The algorithm is designed so that 95% of the time the market will trade within it. Now here's the important part to understand. That all works fine when you've got wide bands, but when they narrow in like this, sooner or later, rather the sooner, it's like a spring in here. It's going to break out one way or the other, and it will get over and stay over the upper or lower band when that occurs for a short period of time. Could be a couple of weeks. Pay attention to that whenever you see that narrowness. In the gold, you keep failing against the 18-week average of closes. I call that the line in the sand. That's the neutral zone. Momentum is down. There is no trend. The market has paid strong attention on prior breaks to support at the 100-day average. You can see you've gotten to that zone, and certainly the lower Bollinger Band. And I expect that to show up again. So I'm looking at the 164.50 where it's at when it hit this today, down to 160.97 is serious support. GDX, how could this be bullish if the miners, in other words, the mineral, the gold, is falling? And it's not. Miners are getting slaughtered on this move. You can see that. I think they'll find major support on any break to 29.09 to 28.15. That is not a sign to buy, but it is a sign that I think you'll see the pros covering with both hands short positions. What about embedding? Look at this. Both numbers under 20. Last week under 20. The week before, no. This is the important week. We'll see if it can embed or not. ARC. ARC just keeps hanging in here at this 18-week average. It's not trending. It's just doing this. Waffling back and forth. Cathie Woods is getting out of Tesla, bought Robinhood, buying other parts. China, she's dumped a lot of her exposure there. So we'll get word on what that's doing. In Amazon, lower highs, lower lows. I started pointing out to you way back over here in these regions that there was going to be some problems because the press is playing up that people should run out now and buy their Christmas gifts because the shelves are not going to be full this shopping season. Will that help or hurt Amazon becomes one of the questions. In Apple, I looked like you did at the release. I was not impressed. If you're a camera aficionado, yes. You got to love the new features that they're putting in. It puts them supercharged right in the face of all the other cameras that were ahead of them for years and in cameras and phones. Maybe puts them ahead. The other features, it's not going to make me, who's not a camera freak, have to run out and trade in my phones, my 12s or whatever, for the new 13. So that's what I think is the negative right there. And we don't know enough about the watch yet. They said it'll be released, but they gave no release dates. I'm hoping it's Christmas. TLT, what do we have going on? Well, it's a fight for direction right now. The market acts like that 112 area was your bottom in the 10-year note. Now we're pushing the 138 level again. We keep failing up here. We have the FOMC two-day meeting this week, Tuesday and Wednesday. Stay tuned for that. DBA. If you follow my daily reviews, I put out a special report on soybeans. Go to our website, www.iraepstein.com, and under soybeans, actually not under soybeans, under research, you'll see my soybean report. I only keep those reports up for 3 business days. So if you don't look at it, I put it up yesterday, it's going to be gone on you before you know what's going on. And what's the importance? It impacts this fund. This is the ag fund. So I think that a bottom could be shaping up later this month in soybeans on a historical basis. Well, that, I guess, covers everything for us. I want to remind you how I start your morning off. At 9 o'clock now, each morning I start taping a 20-minute video for you. Why 9? I want to see the government reports. Most come out between 7:30 and 9 o'clock. I'm going to cover for you the short-term trades in the market, the longer term. On Saturdays, I record a weekly video only using on the 40 charts weekly charts. And I'm giving you in that where I think you should buy, sell, hold, take profit, cut positions. A lot of the traders love that weekly chart because it's the longer term play. I cover, you saw that, a whole array of markets. Not expensive. You get 24 videos a month, each approximately 17 to 20 minutes long, $8.95. Give it a try. What do you have to lose? Go to www.iraepstein.com. Take a look. I explain how it works in the other videos that we have there. And remember, when you're in there for the research, take a look at the free soybean report. Have a great day.